The real cash balance, what your bank account is not telling you. Most business owners think they know how much cash they have, but they don't. They know what their bank account says, but those are two completely different numbers. And that difference is exactly why businesses end up saying, wait a minute, we had money in the bank 2 weeks ago. Where did it go? Today, I'm going to show you the one number that I trust far more than any bank balance. Because once you start using this number, you'll make better decisions about hiring, investing, and growing your business. And you'll dramatically reduce your chances of getting blindsided by a cash crunch. This one number is probably causing more bad financial decisions in your business than almost anything else. And here's why this matters. I see owners do this all the time. They check their bank account, they see a balance higher than they expected. They first take a sigh of relief and they're like, wow, this is awesome. But then almost immediately they're thinking of ways that they can actually spend it. Should we pay bonuses? Should we invest in marketing? Maybe it's time to hire someone. Or should we invest in that equipment that we've been talking about? They decide which one to invest in, and then 3 weeks later, they're left wondering, where did the money go? The problem isn't that they're bad with money. The problem is they've been making decisions using the wrong money number. Today, I'll show you the number you should be using instead. Think about staying in a hotel. You swipe your credit card when you check in. Your banking app says the money is still in your account. Looks like it's yours, but it's not. You've already committed, and the hotel has already placed a hold on it. The money's already spoken for. Your business bank account works the same way. Just because money is sitting in the bank account doesn't mean that it's actually available for you to spend. Some of it already belongs and is committed to paying your vendors. Some belongs to the government with income taxes. Some belongs to your customers because you've received money that you actually have not earned yet. And then also some of it belongs to your future business because you need to protect and save some of that money so you can actually fund your growth plans. The money hasn't physically left your business yet, but mentally it already should have. That's the mistake most business owners make. They mistake visible cash for available cash. That's why I use something called the real cash balance. It starts with your bank balance, but then it subtracts every dollar that's already been committed to someone else. And there are only 4 categories that you need to consider. The first one that you need to consider is the money that's been committed to others. And that's going to include the promises that you've made to your vendors, to your suppliers, to your employees for payroll, and then also the credit card company. The second commitment that you need to consider, that category, is the government. And that's going to be any taxes that you've collected, but you owe to the government. And that's going to be your payroll taxes, sales taxes, and even income taxes. You've collected the money, you just have not paid the government yet. The third category is your customers. You may have deposits that you've received, but you have not completed the work yet. And so you would consider the net amount of the money you've received from your customers. You would subtract that, but then you would be able to add back any accounts receivable that you're expecting from them for any services that you've already delivered, but they have not paid you. And then the fourth category that you need to consider is your future. What future commitments do you need to plan for? And that's going to consider the working capital that you're going to need for next month, any emergency reserves that you need to make sure are replenished, and then also all of the money that you need to save for your growth plans. Once you've removed all 4 of those commitments, what remains is your real cash balance. That's the money that is actually yours to spend. Everything else has a job. This is where businesses accidentally create a cash crisis. Not because they're irresponsible, but because the bank balance gave them confidence when the money really was not there. It was already committed to someone else. Imagine someone hands you a gift card with $150 on it. It sounds great, but then you discover that $35 has already been committed to a kid's school trip, and you've got a friend's birthday, you've committed $20, you've got $50 of groceries that have already been committed, and suddenly that $150 doesn't feel like $150 anymore. You technically have a gift card that reads $150 on it, but you don't actually have the freedom to spend. Your bank account works the exact same way. Let's use real numbers. Your bank balance has $150,000 in it, but we need to subtract $35,000 for your vendors and then $25,000 for your taxes. You have $20,000 of customer deposits, and you also need to reserve $50,000 for your future growth plans. After you subtract everything, what's really left over? Your real cash balance is $20,000. That's the decision-making money that you have, not $150,000, but $20,000. That's the number every hiring decision, every investment decision, every equipment purchase decision, everything should start with the real cash balance. Once you start looking this way, you cannot go back, because now you know that there's a big difference between looking at the number in your banking app and the real cash balance. It's like looking at your fuel gauge in your car and you see that you've got a full tank of gas, but then someone reminds you, wait a minute, you've already planned for your big road trip tomorrow. And so that suddenly reduces the amount of gas that you've got available for your errands that you need to run today. From now on, stop asking, do I have money? And replace it with, do I actually have money to spend? That one question changes almost every financial decision that you'll make in the future, because it replaces hope with actual clarity. And clarity is what keeps businesses out of cash crisis. Before you close this video, don't let this become another financial concept that it sounds good in the moment, but then you actually never put into practice. This whole exercise takes about 15 minutes, and it takes one sheet of paper, only 4 numbers. You start off with your bank account balance, and by the time you're done, you'll know more about your business finances than most business owners know all month, and even some all year. So here's what I want you to do. Open your bank account, write down the balance, walk through the 4 commitments, and calculate your real cash balance. And you can actually phone a friend to go through this exercise. Feel free to call your accountant or your bookkeeper to help you with this. You can actually even send them a link to this video, because once the 2 of you actually get on the same page, when you're thinking about your true bank balance, the real cash balance that you have to use to make decisions, then it's going to have a great impact on your financial future. Then when you have the actual balance calculated, come back into the comments. Don't share the actual number, but let me know. Was it higher, lower, or about what you expected when you actually calculated that balance? If you do the exercise and discover that the number is lower than you expected, that's usually a sign that there's a deeper cash flow issue going on in your business. And that's exactly what we talk about on this channel. So subscribe. Each week, I'll show you practical financial systems that help business owners to keep more money, make better decisions, and build businesses that feel like you're actually in control instead of constantly on the edge of a cash crunch. I look forward to seeing you at the top.